Hello, all. Good morning, good afternoon, and welcome back. This is an episode, or this is a video where we're going to walk through the tool, and I'm going to get into the details. Not too much. I'll let you explore them, but let me give you just enough to get to understanding what we are trying to build at Stratlab. Right, let's get started. The first on first, we go to stratlab.in and you end up with the landing page as to what it says, right? Very specifically, what we're trying is we need to stop guessing and read the market, right? And at the first go, you will see what we are trying and what is Stratlab about. You can quickly play this 2-minute video and get the whole concept that's there. With Stratlab, I think the force behind Stratlab is the one that's very very interesting. We have about 18 agents that continuously run, crunch data, and build our systems and keep them handy and working. Right. So there's one command center agent, 11 engineering, 2 design, 1 intelligence, and 3 quality assurance agents that are there. We have 5 engines, 1 verdict. What are these? We have smart money tracker, reach the put and call positioning, our proprietary IVR trend score. Then where are the regime shifts that happen between bull to bear, neutral to bull, neutral to bear. We track 50 stocks and 4 indices, and that's refreshed every 10 minutes. And we get some really interesting stats around it by using one of these engines. Right, we have Strat AI page is still being researched and dug deep into. This is a Claude model that is trained as a market analyst that takes input from different AI agents and prepares a full report. The Some of the models are daily trend model. It uses XGBoost machine learning model to generate key insights. Then we use hourly pulse to try and see a machine learning engine that also does the number crunching using XGBoost. And we track world markets to identify and ensure that we as in Nifty is positioned well to sustain the breakouts that's looking. If not, what is the kind of structure that we should be looking at, right? And then this is the free account for now. The next 30-45 days will be completely free. I'd like you to give it a go. Click on free access, or if you want to preview it, you can preview it. You can update it, or you can use it on Google. You can use the Google plugin, and then sign up, right? So now I already have an account. So I'm just going to go into Stratlab and I'm going to sign in, right? So this is mine. Yeah. Okay. Once we sign in, we come into the dashboard. The first key thing that we'd like to have a look at is what Nifty is doing. There is a dealer compression index that we have custom built it, and it tells me where we have to sit with Nifty and what it's looking like, and Bank Nifty as well, the 2 major indices that we look at instantly. What's the market breadth? This is 50 stocks. It tells me which of these 50 stocks and how many are bulls, bears, and the remaining of these are neutral. This is the Strat AI. This is the narrative AI layer that tells me what we have to do and what it looks like. And this has been continuously indicating for the last 6 days as for us to stay short, and that's how we operate. Here, quickly, you can see the transitions as well. You can scroll down. There were about 66 transitions yesterday that has happened, and we then move on to the pricing imbalance, where we use put and call. We use certain amount of strikes that we use to derive at the imbalance. Then we have a volume that is not reflecting right now, but it will reflect once the market is open. And then we have IV skew as well. So we'll have a look at this IV skew as well, right? And then it breaks down into sectors. The sectors, there are 27 sectors for the 50 stocks that we have chosen, the top 50. So it clearly gives you the red, amber, green status. And if you see, There's one bull and four neutral. IT software is showing some strength. These are all neutrals, and there's Wipro that indicates is bull, and then tobacco, alcohol, ITC is indicating a bull symbol, right? So we'll need to we can try and use that there. And as soon as you log in, the first thing probably you might see is that you might see what's the status and what is the quick overview of what's the whole model, everything that's going on. 18 agents, 5 engines, everything come together is what we see at the first. This is what we look at the dashboard. And quick valuation tab, you can see valuation. This is a very specific proprietary analysis that I have done, I have developed over the years, and you can see where Nifty's valuation is at currently, and then you can see all of these sectors of which zone these sectors are at, and then you can play around with them. You want to see contra investing or value investing, then you go somewhere to you know deep value. You'll see two sectors in deep value. You can go to IT. But again, if you want to look at value investing, then you stick to only the sector gauge. If you want to also include your relative strength, right? So there is relative strength against Nifty. It is in deep value, but it is still underperforming. So this is something that for a relative strength investor such as me, I'd want this minimum in turning up, nothing below turning up that I'll enter, which is where I thought about it. And then you'll see an RS filter here. So there's nothing in turning up or confirmed. So I'm not going to look at deep value. I'm going to look at value. There's nothing here. And then there is one turning up here, which is now telling me that media is at near fair and the relative strength is turning up. This is a model of 50 days. So you will see that the last 50 days relative strength against Nifty is starting to do better, right? Which is good enough time. It's like 2.5 months of trading sessions, right? So this is this, and then you can come into my back test of how my proprietary system has performed. Or here you can see full period. Full period is from 1st Jan 99, and you can do a rolling 20 years, and it will come to the last 5,000, close to 5,000 days. And for Nifty, I've kept 12 and 24-month forward looking. When it's near fair, it generally has given 16.2% with 28 episodes that have happened in the last 20 years. Let me go full period. And 44 episodes, it is 16.2% and 33.5%. But there is significant amount of drawdown as well that we can see. A 13% drawdown and a 16% drawdown that you can still see. But at the end of the year, the likely hit rate is about 72%. You will end up positive, and you'll end up at 15, 10, 10, 12 to 15% maybe at near fair area, right? If you hold on for 2 years, it looks very good. 85% odds, you'll end up at 33% returns, right? So this is Nifty, which is why you can look at your ETF investments or Nifty Bs or Bank Bs or anything of that sort. And then when you come into sectors, you can just click on, and you can see where they are, and you can play around with them, and you'll see what are the hit rates that are there, the drawdowns that are there, and which phase they are at, which is extremely important for you to see. If you can see it green here, it's either in value or deep value. If you see it in fair here, in gray here, it's either in fair, it's mostly in fair. And if you see it in red or in yellowish, it is slightly expensive, and PSU banks, which is expensive or overheated at this point. So it will navigate around here so that you can see it, right? I don't want to complicate it, and this is the best I could think of at this minute. There's some problem with 48 month, which is not coming through. Let me have a look at that. Strat AI is my proprietary AI model that takes the information from 5 engines, and it builds smart money, Strat AI, daily trend, hourly, world markets. It crunches the data into these kind of systems, and it gives you the final certain output that you can try and look at. And this is one of the things that's been rated very, very highly. Every time I've done a test to see how my narrative AI page is going to look at, right? This is using Claude model. This crunches everything into the all the numbers, all the outputs that comes. It summarizes and then it gives a small situation of where we are now. It very clearly for the last 6 7 days it never told me to go long at any instance. It kept with 5 consecutive bear regime days anchored by persistent call writing. So this is another interesting element that we can take a look at from here. Then now coming to global, one of the reasons I built this is how to identify, why my breakouts are failing. And I understood from my research that the global market support is not there. And then if you can see, Nifty is at the bottom most. It is the most underperforming asset at this point in time. Everything else is looking sort of better. This is a relative strength ranking. If you see, the -2% is the lowest compared to every other index and commodity and currency that you can have a look at, right? Even 20-day momentum, we've taken the biggest hit. So this is how my global indicates. As long as it's -3, stay away from longs. But this is an entirely interesting story for us to figure out, how to start mutual funds. When people want to start mutual funds at low, probably -2 and -3 are the places that you can start investing or up your mutual funds and sit down for the next, 36, 48, 4 to 5 years, at least 60 months. And I think you might see a more than fair return on your investments. This is everything that we do. There are blogs as well. That's work in progress, and we'll have a weekly view. We'll have daily view as to what's going on, and you can have a quick look at these. There are some really interesting studies that are going on as well, and I will share with you all soon as I go on updating these content. And my USP is to capture custom data of all of these transitions. What is the imbalance? How to make this something into a purely quantitative edged based trading, which is with the most custom data that is available, being hand drawn, built, and trying to crunch the numbers. I let me go ahead and give you a little bit of a brief of what's happening, right? So this is what's being done, and we need to. This is still too small. Please don't go look at this and get into jumps. We are trying to build an intraday decision center where it gives me a lot of information as to what's happening, where is the flips happening, what is going on. This is about 1,500 intraday snapshots that have been recorded. If I can quickly show you, I think it's somewhere here. So we capture 75 of these every day, and we've been capturing it for a few days now, right? So this is how it's coming. That is the future. The AI narrative layer, Strat AI, will take over, will crunch all the data from different sources, EOD, hourly, 5 minutes refresh, 10 minutes refresh, and it's going to crunch it and bring it down to really, really quantifiable patterns and systems that can help us make quant based decision making rather than a gut based decision making, which comes back to my first statement of stop guessing and reading the market with data. This is the intelligence system. It's quite a long introduction to this, but I wanted to do this very, very specifically so that somebody who really, really is interested in data-based trading and investing. This is for us. This is for you, and I hope you enjoy this. If there's anything, please feel free to drop a note at vish@stratlab.in or support@stratlab.in, and one of us or some of us will pick this up and we'll get back to you at the earliest. Thank you very much and have a good day, good week, and a good year ahead. Thank you.